Today, we're going to be discussing the 5 most important lessons that I have learned in crypto. This has been from my history here from 2017 all the way up to now. And I have been very much burnt from a lot of the mistakes that I've made, but I've come back stronger every single time. And this video is here so you guys don't have to get burnt in the same way. If you don't know me already, my name's Connor. I run a YouTube channel with over 300,000 subscribers. I've been making videos on crypto since 2020. My YouTube channel has been around since 2006, which shows my age, and I've made millions of dollars in this space. If you do want to learn more about crypto and all of that good stuff, hit that subscribe button. And we're going to be breaking this down into 5 lessons. The first lesson being only invest money you can afford to lose. And you might be going, well, that's a bit boring, isn't it? I know that already. But a lot of people don't. So let me just break this down. All right. So everything in crypto carries risk. Even stable coins carry risk. Terra Luna was $1 billion collapse that no one saw coming. It wiped out 75% of what I was holding in stable coins at the time, and it decimated me, right? I was so upset. I was sad. I couldn't believe I'd been so stupid. I thought they were stable, but they weren't. All right. We get up, we pick ourselves up, we dust ourselves off, and we continue. FTX then collapsed. Even big exchanges, the biggest in the space, can go to zero. So this is the mantra I live by. Once the money leaves my wallet, it may never return. So therefore, I only invest money I can afford to lose. When I say that, for example, on my YouTube channel, I talk to people about DCA. DCA only works if you essentially have never-ending money. How do I have never-ending money, which is what people seem to say a lot? I have an income. That income's monthly. I have expenses, rent, food, utility bills, yada, yada, yada. And then I have what I save. Then I have what I have for my other investments. And then I have money on top, right? Supplementary income. That's what I use to DCA. I won't be annihilated if I lose that money. All right. So that's the most important. This is the most important thing, the most important lesson. Now, lesson number 2, understand what you're investing in, please. All right. I'll take you back to what I just said about the Luna crash. I didn't understand the mechanism of which UST, the stablecoin that crashed, worked. So therefore, when it started to crash, I actually didn't understand the ramifications to the extent of what was happening. So I was left holding the bag. So I always suggest understand what you're buying. If you're going to buy a crypto, understand what it does, understand the use case, and figure out for yourself why you're buying it. You may be buying it for a short-term trade. So if it's a short-term trade, treat it like that, right? In a week, if it pumps, take profits, for example. But if it's a long-term investment, like my long-term investment into Bitcoin, I understand it, I understand the fundamentals, and I know why I plan to hold it and how long I plan to hold. 10 years, 20 years, 30 years, all right? So people chase yield without research, which is essentially what I was doing with UST. So again, once the money leaves my wallet, it may never return. So if I'm going to stake something, it might be gone forever, all right? So if you hold assets with long-term fundamentals, you could be in an opportunity to hold it for a long time. Let's say Bitcoin, Ethereum, XRP, Solana. You may want to hold those for the long term if you understand them. So that way, when there's a big economic downturn and they crash, you're like, well, I just want to buy more. So I'll have a bit more. That's an example of a long-term outlook. But you won't have that long-term outlook and you won't be able to buy more in a crash if you don't fundamentally understand what Bitcoin does, the purpose it serves, and why it might pump once again. All right. So confusion equals chaos and knowledge equals confidence. Simple, right? Lesson 3, DCA beats emotion. Don't trade on emotion. Don't buy on emotion. Don't sell on emotion. Don't leverage with emotion. Don't chase gains. Don't chase losses. Don't revenge trade. You didn't time the bottom. You accumulate during the pain. All right. People often say to me, how on earth did I manage to buy Bitcoin at 16K? Because I started buying at 40K, then I bought again at 30K, then I bought again at 20K, and then I bought again at 16K. And it was the most painful day I've ever seen in crypto. And I bought because that was my plan and I followed the plan. The best buys are when the world is terrified. Everyone says they're going to be buying, oh, I'm going to buy Bitcoin when it crashes. You're not, unless you have number 2, understand what you invest in. Understand what you invest in. So when the world feels like it's ending, you're going to buy it, unlike the people who panic sold at 16K. And there were a lot of people that did that. Now, I use DCA with extra income every single month to buy assets I've done my research into. So I take money I can afford to lose and I invest it into assets that I've researched and I understand. This removes the emotional side of trading, right? I just invest into what I believe in with money I can afford to lose over time, which also coincidentally leads me to buy at the very best times because I'm buying anyway. Now, lesson 4, diversification to me, Connor Kenny, is survival. Now, a lot of people might argue with that. They might say, well, you should go all in on Bitcoin because it's the best performing asset over the last few years. If I had have gone all in on Bitcoin in the bear market last time, I would be significantly richer than I am right now. However, I may be on my whoop, right? On my whoop age, I may be significantly older. You see how well I sleep, right? I sleep pretty well, if you can see that, because I have no emotion. I have no emotion attached to my portfolio because I'm diversified. The best buys were when the world was terrified, right? So when the world's terrified, if you are holding all Bitcoin and your entire net worth is in the toilet, it's going to be much harder to remove that emotion. So if I just had crypto in my portfolio, it would create panic. So I have all of those things: cash reserves, Bitcoin, crypto, stocks, real estate. When crypto drops, something else holds value, or maybe something else goes up. In fact, in the last bear market, Bitcoin crypto went down, my real estate went up. Great. I was diversified. It created calm, right? And it gave me the opportunity, the yield from the real estate, to invest into Bitcoin. Now, this might flip. Real estate over the next 5 years might go down. But guess what? Bitcoin might go up. If that doesn't go up, stocks might go up. If it all goes down at once, I have my cash reserves that I'll slowly use to DCA in. You're not going to like this, but the last lesson is bear markets are actually the opportunity. The crowd believes the bear markets last forever. They're wrong, right? Look at the chart in front of me. Only 1 year down is the historical time. 2017's bear market, down for 1 year. 2022 bear market, high from 21 to the low, 1 single year. Then 2 to 3 years of strong upward movement. But it takes time to get back to the high. So people consider the whole time as the bear market and it was horrible and scary, and not the case. You just need to hold assets that you fundamentally believe in, that you're willing to DCA into with money you can afford to lose. It's actually boredom that shakes out more people than fear, because it gets very boring. Sideways action for the whole downward momentum, and then sideways for a year. Boring. Bear markets are where future wealth is created. Boredom, fear, all of that leads to opportunity. Because if you check the charts, it's always sideways, boring, maybe a little bit down, sideways, boring, maybe a little bit down. That's the end of the bear market, right? This big violent move to the downside lasts about a year. Then sideways, maybe a little bit down, boring, up, a little bit boring. Oh, no one cares. And then everyone moves on. No one's talking about crypto anymore. No one's talking about Bitcoin. A taxi driver doesn't care anymore. And that is, in my opinion, the best time to accumulate the assets that no one cares about. Right now, everyone cares about Nvidia, so they're buying it. A few months ago or weeks ago, everyone cared about gold, so they were lining up outside gold shops to buy gold. Guess what happened to Nvidia? Recently, it went down. Guess what happened to gold? Recently, it went down. That's not to say they won't go back up, but buying in euphoria when everyone else is buying is not the best time. Buying in a bear market has fundamentally, and according to history, been the best time. Maybe things change, but that's how I go about it. And hopefully, I provided some value. If you want more of this sort of value, follow this channel, and I will see you guys in the next one. Peace.